Alright, FOMC day, we're going to go over the live trade on the day as well as October results for Q4 cumulative with today and with October. So the trades on the day, minus 1,050 on the trade today, down on FOMC Trader. And you can see here we took the breakout trade, and you know, we're in this market environment where it just keeps coming back no matter what. And then it finally broke out after we were stopped out, and so you know, I'm surprised it didn't come back down here. We've been seeing a lot of fake breakouts and false breakouts, and so a lot of divergent price action. And today it kind of broke out after we were stopped out, but you know, it seemed like today we would you know, finally get potentially get a breakout. It's unusual because most Fed days, the market environment we've been in lately is almost like a Fed day every day. The market's really choppy, and today is one of the more trendy days. Even though we were stopped out on this trade, it's one of the more trendy days, and it's FOMC day. So it's kind of a mean reversion where FOMC day is the trendy day and every other day is choppy. And so trendy for FOMC, choppy for every day. And so where we are is minus 1,050 to start November 1st, taking the FOMC trade. This had a 5-to-1 payoff, and potentially it was a trendy day, so the breakout potentially was a good trade to take, but it did come back enough to stop us out before rallying. And then the final results for October were minus 1215 live results. So our total results in Q4 now are minus 2265, not quite down 1%. This is on a 250K account. And so we'll just say approximately minus 1% on the quarter. And this is a very, you know, the type of market environment we're in. Happy to be trading water this well in spite of all the difficulties. Let's look at where the portfolios were. I've updated the portfolio calculator through the end of the month. This is where the old stock index portfolio 34 was. It was down 10,187.50. Closing right at a worst case drawdown on the month, and you can see the drawdown curve looks like this in this extreme chop. And we can see the S&P Portfolio 21, which is for the E-mini S&P, was at 27,225, down 20,000 on the month, and hitting its worst case drawdown right there, almost at a worst case drawdown. Today it was down another 1,500. So sitting right at that worst case drawdown again. Let's look at the trades on the day for today. So the Cobra 3s are having a tough time with these stop losses, a little bit too tight. Continue to get stopped out at the lows. Minus 1875 there, minus 625 on Tick Pulse, and then plus 1,037.50 on DTM4. And those were all the trades, just 5 trades on the S&P Portfolio 21. So that puts us down about 28.7 on this. And then if we look at the stock index portfolio 34, it was up about 6,000 today. So it's up, you know, the drawdown was reduced down to 61,000. And so let's look at those trades as well. So here is the money management indicator, and let's look at the signal strength trader, what it would have done. It doesn't trade on FOMC, but it does get in at 4 trades if it happens before. So it would have entered there, and it may have been stopped out. Let's see where it would have entered on that trade specifically. It would have entered when the strategies got long for. And so it would have gotten long 4 right here at shortly after. See, it turns into 4. Next bar open is at 14,645, 75-point stop loss. And so it would have been stopped out. Signal strength trader would have been stopped out today as well. $1,500 stop loss. The stock index portfolio 34 was up 6,400 though, to bounce off its lows a little bit, and the signal strength trader doesn't trade on FOMC. So just a tough market to trade for it to do this, for it to be more trendy on FOMC day, and to trade like FOMC day on the other days, for the other days to be more choppy than FOMC day, and we avoid FOMC day because it's normally choppy, and for it to be trendy is is a little bit of a mean reversion and goes against what we've been doing. And so this market just continues to be challenging, but I'm optimistic on some of the strategies that I'm looking at and the fact that we're managing risk well. And so I want to show you some of the portfolios and strategies that we want to trade in November. So these are some of the strategies that are open code in the money management algorithms and portfolio money management algorithms in the new members area that I'm adding and I'm updating and I'm almost finished with. And you see RSI Fader took this trade yesterday, ADD divergence. The base version lost today. The money management algorithm caught it perfectly. Not perfectly, it didn't catch the low of that move, but it caught this afternoon move, and it does trade on FOMC. In this back test, you can see what this setup does. So I want to add these to the portfolio calculator. And here is RSI Fader. And let's see, let's get that updated. There's RSI Fader, money management algorithm version, momentum fader. Momentum fader also did well, capturing this move. Here is the money management algorithm version. This is just the way this market is just trading right now. It's so different. You almost have to just trade a completely different strategy, more indicator-based strategies than we're used to. And so it could be a good time to trade these two strategies as well. These have such shorter time periods though. These only worked since June. Took losses today, shorting the market. And so this one shorts at 1300, takes the reversals around 1300. Either goes short or long, and this one goes short or long at highs and lows. And so it would have, let's see, this low is a little too early in the day, or it should have caught that. If it would have been a little bit earlier or a little bit later, it would have caught that. Now, these are some of the ones this is the SR counter trend with one rule removed. It does really well on the metals. And so here is SR counter trend silver, and I'm planning on turning on this one tomorrow and trading as well as the signal strength trader for now. But this is what I'm looking at in this equity curve. I like starting on a drawdown on a trading system. And I need to add these to the portfolio calculator. Now these don't work. These work well the last 2 years. And so this gives us an opportunity to get in on the drawdown and manage risk. Here's the same system for gold. And it's in a little bit of a drawdown. I'm going to trade silver tomorrow. I need to go back and add these to the portfolio calculator to see if I should trade them on gold and crude oil as well. Crude oil, this version it's not as good on crude oil, obviously, but it's starting to perform over the past year. It's worked well over the past year, and it's at equity peak. So I don't think I want to add crude oil yet. Doesn't work as well in the stock indexes, even though you can see some trades that work today. You can see there's a downtrend in that. S&P, it's one of those things though, you could start trading it and it could start performing well. A lot of times we see strategies that didn't work historically and then they start to work because of the market mode we're in. An example of that is some of our strong trend strategies like gap continuation. They look like this before 2018, and then after 2018 they look like this. Now are we going to see the same thing? Is it going to be the exact opposite now? Higher interest rates, choppier market. You see these chop strategies do this, and then in 2024 it starts to do this because the market is the norm. If the norm becomes the chop, then we have to trade something like this, and the jury's still out because we don't know. And so we could add some of these chop strategies, SR counter trend strategies to our portfolio, along with the current trend strategies as well. But I'm mainly interested in starting with silver. I tested it on Apple, and on Apple it's a straight down equity curve, but historically there's some time period when it does better, and so maybe it does perform well in the future, but even though it hasn't in the past, because of the nature of the strategy has been in line with the market overall. All these markets are very choppy and pretty correlated right now in their choppiness. And so also want to take a look at a portfolio calculator. So here is a portfolio setup 20 strategy portfolio set up. 13,927, $4,200 drawdown, and it trades a combination of one S&P strategy, adaptive moving average. It trades 5 NASDAQ strategies: Viper, Gap Continuation, Robot, AT 2022, and Tick Pulse. These are the kind of the trend strategies. I would like to add those 3 strategies from that I just explained that are in the money management algorithms is ADD divergence, and I would like to add RSI and in the momentum strategy. And so I'd like to add those 3 to the portfolio calculator, as well as the SR counter trend that I just mentioned, and a few others. There's a list of strategies that I'm working on that I've mentioned before. Some other SR counter trends that use a $500 profit target and a $1,200 stop loss. And so there's quite a few strategies. Hard to add stuff to this portfolio calculator. It takes a long time, and I'm working on that. So adding these 3 strategies to the NASDAQ would give us some chop strategies to go with the trend strategies, and some additional SR counter trends to trade as well. And so let's look at the rest of the markets to trade. This is exciting because it includes gold, it includes silver, it includes crude oil, and it includes natural gas. And so not all these strategies are not all my favorite strategies, but the reason I want to do this is the top performing patterns that we've seen in this market is the SR counter trend. So if you take a look, here is the SR counter trends. Complete recovery. We talked about this recovering, and it is up 15,183. This is from 2020, and it's one of its, you know, if you just look at the SR counter trends, this has some Cobra CTs in it, but it's the market is more like 2017 or 2018, and so looking for more potentially of these kind of years with higher interest rates. The interest rates were low here, but they were used to higher interest rates, and as the market got more and more used to low interest rates, the momentum capitulated or went parabolic, and then those choppy SR counter trend type strategies did not work as well. And now with higher interest rates, it seems like this pattern could come back. We talked about that. There was another skinnier, I guess you could say, SR counter trend portfolio that we looked at, the SR counter trend conservative portfolio right here, and it was up 2,700 in October. So it's down here still. It recovered. We talked about this one bouncing. When it was in this area, it went a little lower and then bounced. And so SR counter trends, we want to do more of what's working at the right time, and so I'm going to add these strategies to the portfolio calculator as soon as I can. And I may start trading a variation of this in my managed accounts, and then have an update for the stock index portfolio as well. So I want to add those choppy strategies back, the ADD, momentum, RSI potentially for the stock indexes, and then for the managed accounts also add some more of these SR counter trend type strategies for the other commodity markets that could do well. So once again, this is the first trading day of November, and we are looking forward to moving into November. I keep thinking the market's going to pull back a little bit more with all these breakouts, all these fake breakouts to the upside, and this weak bounce. I keep thinking it's going to roll over again, and we'll get some trends to the downside, but it's hard to tell. We're in that seasonally strong time period, and October was could have been a continuation of the summer. Summer is usually June through August, and then sometimes that gets carried into September. The summer chop gets carried into September, which it did this year, and now it's really carried away. If this is just a long summer, it's really carried away into October, and maybe we will get some seasonal strength in November, December. Those are the seasonal time of the year. Lots of liquidity is insistent on pushing the market up this time of year, so maybe we'll get some more clean breakouts instead of these always make sure you're stopped out type breakouts. And starting the month down minus 1K, and we are sitting on the quarter down about less than 1%, so approximately 1% on the quarter. is our total loss for Q4 so far, and looking forward to recovering that and trading some new strategies. I'm optimistic about some of these new strategies and opportunities that we have and the new pattern. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.